So I want to head on over to the floor of the CME Group where we have Paul Nolte, the Senior Vice President and Portfolio Manager at Kingsview Asset Management. He's standing by to help us take a look at these numbers on a Friday and interpret the data. Paul, looks like the retail sales had the dollar spiking here a bit. I noticed that the number came in at 0.5, a 0.5% increase, a little bit below what they were looking for. But if you take a look here, guys, at retail sales minus the autos up a little bit higher than they were looking for. Paul, talk to us about what you're seeing in terms of market reaction. Obviously, the dollar bulls like it, and it's giving rates a lift here as well.
Yeah, it is. It's pretty much in line with expectations, not too far out of whack. I think traders were anticipating maybe a little bit weaker data, or significantly weaker data that would have supported treasuries where they're at. So you see yields backing up here a little bit more strength in the dollar. But again, I think it's an inline number, and really when you take a look at it, it's a little bit of a surprise because when we looked at it's more in line actually with the sentiment numbers, which have actually been pretty positive, but it is different than a lot of the other economic data points, which have generally been weaker. So I would chalk this one up as a win for the U.S. economy, and I think that's part of the reason why you're seeing yields back off and the dollar pick up here a little bit.
A win for the U.S. economy, Paul, but probably not enough to shift the sentiment in terms of the Fed expectations, at least in terms of rate cuts to come.
No, we're looking at north of 80% by July. We'll get a lot more color next week. Obviously, we have press conferences after each meeting, so we will be parsing every syllable, every letter of Powell's commentary to try to get an idea of, are they going to be patient, or are they a little nervous about weakening U.S. growth enough to cut rates in July? And I think right now the expectations on Wall Street certainly are that they will cut.
Yeah.
And if it looks as though they're going to be patient and sit on their hands and do nothing, we have risks to the downside, I think, in the equity markets here.
Yeah, Paul, everybody's talking about concerns related to retail and some of the growth concerns, the consumer concerns that we've heard about. It's really a lot of speculation for the most part. And, this number today, for the most part, a reflection of what we saw earlier in the week. The NFIB and the Red Book, for that matter, both pointed to a healthy consumer spending still, and really no major pullback, at least still at this point.
No, you're right. And then the inflation numbers on top of it were all very good.
Yeah.
So you're looking at, again, the risks of a recession are rising, not dramatically so. Our call is generally weaker economic data, but not a recession at this point, at least in the near term. So we could see the equity markets bounce around. We can see the bond market kind of bounce around here a little bit. We wouldn't necessarily be surprised if the Fed sits on their hands and does nothing during the summer months, maybe in the fall if the data continues to weaken. And I think that's where the big difference is between the bond market and the equity markets. The equity markets are very close to all-time highs, but the bond market is signaling some different economic data than what I think the equity markets are looking at here.
Paul, what does all this mean for the dollar if the Fed's just kind of left sitting on their hands, as you mentioned? Are we going to be kind of back to where we were, where the focus continues to be on the euro currency, the British pound? We continue to see strength in the dollar relative to those other two currencies and higher highs, but pullbacks almost immediately and very little energy associated with the move to the upside. It's been somewhat lethargic, but certainly channeling higher.
And that's exactly right. That is the word I would use, as channel. We've been in that channel really for the last 9 months or so, and it's a slowly rising one. From that perspective, the dollar's been very well behaved. And as we've talked about for a long time, certainly the cleanest shirt in a laundry. That's really pretty bad when you look at Japan, you look at Europe, you look at England. They are, economically speaking, very messy compared to the United States. So as a result of that, we would continue to see generally an upward bias in the dollar, and you're seeing the flip side of that in the euro and in the pound and so on. So again, we would anticipate that to continue. Certainly if the Fed sits on their hands, that will give the dollar a big boost.
I'm glad you mentioned the pound because we're still a couple weeks away from anything definitive, but it did seem like this week Boris Johnson has emerged as a likely candidate to win the Prime Minister's position. First, Paul, is this what you're seeing? And second, does it increase the likelihood of a no Brexit deal if he does?
Yeah, it does, and we're already hearing some rumblings. There may be a coalition building to oppose Johnson as well. So, we're early stages, or mid innings, if you will, of this ball game.
Yeah.
And as we've talked about, I think Brexit is one thing that's going to get punted. I don't think whoever comes in as a prime minister is going to solve the problem, because there are so deep-seated concerns on both sides.
Yeah.
And again, they're going to have to negotiate everything with Europe, and Europe is really not interested in helping them out. So it's going to be a difficult road ahead, no matter who's sitting in that chair.
Paul, let's talk demand concerns. First, China industrial output slowed to 5% in May from 5.4% in April, but is it too soon to focus on these numbers too closely, as we know they've taken drastic stimulus measures, and in theory they should be improving as we speak?
No, they should be, but I think what you're seeing is really the impact of trade. And because they are really much more of an import economy, and I should say an export economy, and those are really hurting at this point, we would expect to see those slowdowns. Monetary policy has got a long lag, 6-9 months or so. So even though they've started to institute some pretty easy monetary policy, I think you're going to see the impacts of trade for probably the next couple months before you get to see the impacts of easy monetary policy in China. So again, it's going to make the G20 a very interesting meeting, if you will, if they meet in 2 weeks.
How about the retail sales numbers? I'm sure you noticed 8.5%. They beat consensus levels. They were above 8.5% again and beat consensus levels. I think they came in at 8.6%. I mean, those are strong numbers, Paul.
That was a strong number, and it comes off a really weak one in the prior month.
Good point.
But so again, when you look at when you average those out, and retail sales can be noisy both in China as well as here in the United States, you got to smooth them out a little bit. But the ancillary data, the manufacturing, et cetera, has been very weak in China. So again, I would put that as more as an outlier than it is a new trend or something to point to from a positive perspective in China.
Paul, one more question. Now that we've got the retail sales numbers this morning, we can start to focus on the Fed next week. What should we be expecting, and what should we be dialed in terms of verbiage and rate rhetoric?
Yeah, that's going to be an interesting meeting and certainly press conference. We're expecting no change.
Okay.
And what we're going to be listening for is is the door truly open for a rate cut in July, or is the Fed patient?
Okay.
If you look at Powell's comments the last time he was interviewed, you could interpret it as though they're not going to make any changes for a while. So there is, with this market right now, it is very black and white, and there's not a lot of gray.
Yeah.
So I think what we'd like to get back to is a little bit more gray and more nuance. But right now, the expectation certainly for a cut, and that's what a lot of investors are going to be looking for, is that type of language to see if a cut is forthcoming in July. Yeah,
well, you mentioned a lot of black and white, not a lot of gray. We've been seeing yields in the red. It'll be interesting to see if that forces the Fed's hand. Traders, that's Paul Nolte joining us, the Senior Vice President and Portfolio Manager at Kingsview Asset Management. Paul, really appreciate it.